Well, hi, y'all. Thank you for being willing to jump on and have another conversation about the current insurance crisis that we're facing in the state of California. And so I'll do a quick introduction. I'm Kimberly Johnson, and I am the CEO of what is now Arch Collaborative, formerly Children's Legacy Center in One Safe Place. And I will pass it over to Sarah.
Hello, my name is Sarah Peary, and I am the Chief Program Officer for the Integrated Client Care Programs here at Arch Collaborative.
Nelson, go for it.
Yeah, Nelson Aldrich, Winton-Ireland Insurance, just tasked with trying to solve some insurance problems for some clients and happy to be here. So thanks.
Yeah, absolutely. So, the children, just as a kind of a quick looking back context, the Children's Legacy Center holds the rural California placement pilot that was specifically designed for C-second at-risk youth with an aim to serve really kind of the northern 25 California counties. And I think although that pilot has had a number of iterations over the last couple of years, one of them was to bring online our foster family agency. And then, it feels a little bit like, gosh, our whole world changed. How long ago was it now, Sarah? 2 months, 3 months, something like that, when we got our notice of non-renewal from NIAC. So, Sarah, just because I don't want to have people kind of go back to the former video, can you just give like a very quick kind of snapshot of why we're having this conversation and a little bit about AB 2496 and where we are?
Yes. So AB 2496 was a piece of legislation that we kind of started hearing about back in June of this year. And the original iteration of the legislation kind of closed some loopholes that allowed insurance companies to stay involved with foster family agencies in the market. And then there were some amendments that were made to the bill in July that caused one of California's biggest insurance companies for foster family agencies, NIAC, to say if there are not some changes made to the language of this bill, we're not going to be able to insure FFAs. And that language did in fact stay in the bill, which was then passed here at the end of September. And so back in August, NIAC, who insures about 90% of California's FFAs, made the decision to pull out. And so they started sending non-renewal notices to those FFAs and cancellation notices to some for 30 or 60 days. And so we were on kind of the early end of that, and we received our non-renewal notice at the end of August for the end of November.
Okay. Thanks, Sarah. I appreciate it. So we did do a previous video that gives a lot more, I think, just sort of context for the conversation, but I just wanted to provide a little bit of an update, both paralleling what our own agency is navigating as one who has submitted we have surrendered our FFA license, and we are going through that process with CCL. But actually, just before we started recording, I think we had an interesting kind of offline conversation about the timeline pieces that I think is going to be really critical to just have us circle back to. And so, Sarah, will you kind of take it back and just talk about our surrendering of our license, how that process has unfolded, and then speaking to some of the timeline concerns between you and just Nelson, getting your perspective on that as well?
Absolutely. So, in about mid-September, we got a call as community care licensing was calling, I think, every agency throughout the state to see how they were affected. And so on that call, when I informed them of our non-renewal date, they gave us the reminder that for any agencies that may have to close as a result of this, we have a 60-day closure plan that was due to community care licensing. So for us, that was actually submitted on the day of our last video, September 27th. And within that closure plan, we had to detail the plan for each and every family and each and every youth, how we notified them, when we notified them, and how we are working to port those families to other non-NIAC agencies and or the county. So we submitted that just about 3.5 weeks ago now. I had almost immediate response from community care licensing back to me approving that plan. And for all of the families, within the next week after submitting the plan, I gave updates as to what each family had decided where they were porting to. The majority have chosen to go with our host county. There are a couple families who did choose to go with a local agency that is non-NIAC insured. However, they were concerned by the fact that that agency only has basically a year of guaranteed stability. So that was the ultimate reason why so many families chose to go with a county provider rather than an agency. And I have three outstanding families that haven't chosen what to do yet. And so community care licensing has been very active with me in engaging in finding out what are the decisions that that family is making. And we have settled on some deadlines for which, if I do not get answers from those families, then our agency will be rescinding their approval as of a specific date.
Yeah, absolutely. So Nelson, can you kind of take it from there and just sort of speak to the timeline for a notice of non-renewal and actually going into the underwriting process, and how that kind of gap in the 60 days compared to the underwriting process is potentially problematic for organizations like ours?
Yep, happy to do it. So a couple of things just to start out. So NIAC would be giving notices of non-renewal. Even if it was a midterm cancellation for a change in operations, they would usually have to give 60 days notice. I think the bigger issue here in terms of timeline is the 60-day state mandated window where you have to give them notice with your plan for the surrender and, where the families are going to go. Underwriting companies will not do anything 60 days before renewal. They'll basically log in the file and they will then kind of sit on it for a while. During that time, there might be some very basic underwriting that's going on. The bigger issue is that, the FFAs are required to sign an affidavit that says that they have already surrendered their license and ceased all services to foster families. If there's a 60-day cooling off period required by the state, that just doesn't leave a whole lot of time for underwriting to actually do their job and for the FFAs to be able to, in good faith, sign that affidavit. So we've got a big timing issue here. My recommendation would be to make up your mind as quickly as you possibly can so that you can, in good faith, sign that affidavit, because we do not know yet how NIAC is going to respond to a situation where notice of intent has been given to surrender an FFA, but the license hasn't actually been surrendered yet. We don't know how they're going to respond to that. So you want as much time, as much distance between when you actually put in your notice and when it's actually surrendered and when the underwriters are going to be looking at that file. Because as they're underwriting that file, you're still continuing FFA operations even while you're in the process of surrender. So it's really tough to, in good faith, sign that affidavit and for the underwriters to say, well, how close are we to actually wrapping things up here? So that would be my one and only comment on the timing of the timing situation of surrender and the underwriting process. And I would add a little bit to the underwriting timeline. There are certain carriers who might look at things 90 days in advance. Most carriers, if we're very lucky, will give us final terms a couple of weeks in advance of renewal. So that's not a lot of time for you guys to be able to do whatever you need to do to wrap things up and make a decision. You really have to make a decision not based on hard numbers, but on anecdotal evidence. And the anecdotal evidence that we've seen is that if you have to continue the FFA licensing and operations, that you should expect anywhere from 4 to 8x in premium. There are a few other caveats that I could talk about in terms of other markets that we found later in the discussion, but I'll leave that up to you whenever you want to go into that.
Yeah, that sounds great. Well, and I think what you said in terms of needing to make a decision as to whether, so that's assuming that there is a surrender path that is happening. I think it's understanding that the need that foster family agencies and ultimately the board of directors of those agencies are going to have to make a decision that is ultimately uninformed. And I think, one of the questions I sent Nelson a text, I think last week, to say, so sorry to be a giant pain in the butt, but what would it take for us to understand if we were to have our FFA license, what would we be looking at? And that is in part due to our ability to then, we know that we can't find solutions by November 27th in rural counties in particular. Like we know that fundamentally we've talked to enough of the counties, they're not going to be able to offset the premium increase cost. And they have their own staffing portability, like porting the families over to the counties. There's just nuanced concerns statewide. I think for us, rural concerns are always at the forefront of our mind. But at the same time, that doesn't mean that for us as an agency, we would still love to know what is that number. So currently we're going into an underwriting process. We have signed an affidavit. I do think it would be good, and I'll put in the body of how the video is shared, the specific language that was listed within the affidavit that was requested for us to sign, to commit to. And so, yeah, I think it's important for FFAs to keep in mind that they're going to have to make kind of uninformed decisions. And for us on the other side, it's not quite as easy as just saying, well, if you did have an FFA, this is what it would look like. If you didn't, this is what it would look like, even if all the other programs maintained and were the same.
That makes a lot of sense. Let me just kind of rebound off of that, if you don't mind, Kimberly. So that affidavit, when everyone who's listening takes a look, for those who are surrendering their FFA license, they may still want to perform ancillary services
For sure.
to those families or to other foster family agency placements. And so this is I just another kind of disclosure disclaimer. Don't call it disinformation. Don't call it misinformation. This is just evolving information. And
Yeah,
so.
for sure.
So far in my discussions with NIAC, as I've described, kind of, I hope it's okay for me to say your specific situation.
Please go for it.
You guys are surrendering. You want to still be able to provide some services to the families who you have not been involved in placement. So far, the discussions with NIAC have been along the lines of the spirit of our intent and the spirit of the law here is to allow those ancillary services as long as the FFA has been surrendered. I think that they feel, if I'm reading between the lines, that they're sufficiently shielded from claims that could come out of that situation versus claims that would come out of the actual placement, of the kids into the family. So I think that as it stands now, we will be okay for those surrenderers, whatever you want to call it, to continue those ancillary services, but it's going to be underwritten on an individual risk basis. And so if there's, maybe some hairy claims hanging out there, or maybe the size of the agency plays in as a factor, it just behooves you again to get into that underwriting process as early as possible, so you get that bad news, God forbid, as early as possible, and then it can pivot to a different carrier.
Yeah, absolutely. Well, I mean, I think it's a good time to just bridge in terms of, even in just the last couple of weeks, Nelson, what you've seen is potentially some new markets and new solutions that you've seen maybe coming online, and keeping in mind that we're at the early stages of some of the non-renewals. I think initially we were kind of, I think I was a little envious of the folks that didn't have a non-renewal notice until May, June of next year. And now I think on the other side of it, I'm oddly grateful, because it's forced us to not only engage in the conversation, but to be proactive early on. Whereas there's going to be this uptick as these non-renewal notices continue to come out in the coming months. And I think we're going to see the swell of the crisis continue to increase. So I would love for you to talk about the solutions, but then also maybe some concerns you have with, as more providers are looking for some of these limited policies.
Yeah. So if NIAC represented 90-ish alleged percent of the FFA market in California, and there were basically, a handful, 100 or 200 brokers out there who were left scratching their heads for months trying to figure out who the other players might be, there are very few players. And that means there's very little capacity. Yeah. I'm not talking about insurance capacity. I'm talking about time capacity, individual underwriters or program managers or managed general agencies, which in the insurance industry is just a wholesaler. There's just not a lot of human capital out there to underwrite these, few hundred or so FFAs who are looking for new coverage. So of those that we've found, on the last call, I believe that we discussed a program called Megly, We also discussed a program called Prime. For my insurance broker colleagues out there, you're also going to want to talk. Our access point has been RPS. RPS has gotten us to a program called Tango and also QBE. Again, this is not 100% in stone, but it appears that QBE can be potentially a replacement for NIAC for those smaller FFAs who have very, very clean to basically no loss history, no claims history over the last 5 years, who want to keep their license. It's strict underwriting. It's tough to access, but for my broker friends out there, if you talk with the folks at RPS, they should be able to, risk placement services should be able to point you in the right direction there. But again, the big issue is capacity. My feedback is that, yeah, we would have been able to look at this, 6 to 12 months ago, but we're inundated and we're not sure that we can get to it. So getting out there early and making sure that your applications are spotless, meeting with your broker in advance to go over the questions that you answer in those supplemental applications is critical, because there are a number of traps that are laid. There are these deal breaker questions in the application. And if there's no capacity and you put yourselves kind of in the mindset of an underwriter, hey, sorry, I just saw a deal breaker, I'm going to have to pass to the next opportunity. These are production minded oriented people, and you're going to need to put yourself in their shoes and get in their mind space so you can kind of play their same game.
Yeah, absolutely. Sarah, what are your thoughts?
Yeah, I think that from what I have heard so far of some of the FFAs that are pursuing alternate insurance, is that the time is short anyways, and then they may hear of one place that's an option, and there hasn't been a lot of conversation of, if that doesn't work, what's the pivot? And where, if any, is the time for that pivot, especially for families, that when our time clock is running out as an agency, their time clock as a family is running out, to find a pivot as well. Because just as capacity is going to fill up on the underwriter side, capacity is going to fill up on the private agency side as they're getting inundated by people, and also on the county side in their capacity to be able to move families quickly. I was curious if you had heard any more about any other agencies having concerns about families porting to, I know that they're non-NIAC, but if an agency then turns around that was a NIAC agency and renews with a different broker, are there any potential limitations put on that agency to port future families under the new relaxed requirements from the state that came down, that we don't actually have to do a home study update to port a family?
You're asking me that question?
Mm-hmm.
All right, Sarah. So NIAC is the only one that has taken a firm stance on porting. Everyone else is silent on it. So no, I don't have any direct feedback on that, but I'm glad that you asked. And the next discussions we have with those other carriers who are taking on FFA risks, my gut says that if they're willing to take on FFA risks, and they're getting their pound of flesh in the form of 5 to 8x or whatever it is of expiring, that they've fully committed to the business model, and they'll be okay with all of that. But I'd be happy to follow up in the next iteration with a firm answer on that.
Yeah, I think that would be helpful. And then we also had one person that we spoke with at the county that was curious if insurance companies have the ability within their underwriting process to put a cap on payouts for claims.
They do not. I mean, they do in the form of the policy limitation. So a primary general liability policy will come with $1 million limit. Same with abuse and molestation or directors and officers or whatever. And then you would have an umbrella limit on top of that could increase to, by $1 million layer up to whatever you can afford, maybe even 10, 20, $20 million. Although those limits are vanishingly small, given the small capacity left in the state, insurance and reinsurance wise. So that would be their only limitation on their own liability, is just the limit that's in the contract. Yeah. And I have yet to see, we often see sub limits, 100,000, 250,000, for certain lines of coverage. But then, of course, you run into the catch-22 of the counties saying, no, that doesn't meet our contractual requirement of
Yeah.
$1 million, $2 million, $3
Right.
million. So,
Yeah, for sure. So some of the things that we are looking at doing that we've been kind of proactively working on the last couple of weeks is we sent out an all county letter specifically to our pilot county it's a 25 Northern California county scope, primarily rural and even frontier counties. So we sent out surveys really recently, started getting some of those back, which has been honestly like really helpful, a little disheartening just in terms of the information that's coming in. So far of the total youth, we have there's 129 youth that are placed in foster family agencies. You know, one of the directors that was gracious enough to be pretty transparent in their response, when I posed the question, just what are your greatest concerns regarding placements due to this insurance crisis? The response was just an overall lack of placements, movement of kids causing additional trauma, a lack of 24/7 support for families, no human resources at the county level in order to actually be able to support all of those kids, a dismantling of the child welfare system as we know it. We need to have FFAs as county-run systems are not a solution, tragic outcomes for kids and families. And I think, you know, when that's coming from a director position within a county, it's pretty telling. I think the situation has potential to be quite dire. And I think it's why engaging in conversations like this are important. But as we find out in the conversation, there's so much nuance. And right now, everything is very individualized to every individual agency within an individual county and even down to individual families. But I do think, and Nelson, I'll pass it off to you to land the plane on the be proactive part of the conversation, because I think that's where that needs to land. But just really quickly saying, you know, we're gonna resend out an updated just survey link, and so asking our county partners to fill out that survey so we can feel like we have a really comprehensive understanding on our region, specifically within the placement pilot. We're setting up one-on-ones. We actually started those today, doing one-on-ones with county child welfare directors, as well as folks within the probation department. I think probation engagement is a whole other part of the conversation that has been pretty left out thus far. And so we're really trying to proactively engage with probation. 2 of our survey respondents are actually from probation departments. So that's going to be really critical as well. And I think our overall hope right now is just data and information gathering, and then seeing if, you know, you put a bunch of minds in a room and see what solutions can come forward. One of the things that was requested from one of the counties was some sort of placement network that is specific to our region here in the North State. And so a placement provider network is something that is just, I think, conceptualizing. So right now it's always a little vulnerable, I think, to have conversations about something that is very much in process, and at the same time waiting until we have very clear lined out paths is not the option. And interestingly enough, just even in this conversation, hearing Nelson say like, hey, there is this new pathway of a potential carrier that could be an option. We didn't have that information when we had a deadline to make a decision. Of course, now that means do we then like explore that as a pathway? Likely, which is probably not super fun for Nelson's job, but I think that it's just a great example of every piece of information kind of changes the entirety of the chessboard and the strategy that we're using, both as an individual agency as well as trying to bring solutions to the North State. So all of that TED Talk being said, you know, Nelson, I think you just being able to speak to the importance of being really proactive and engaging with your brokers, kind of what you would say to the FFAs, to the counties, and maybe even to the brokers would be a good place to land.
Yeah. Okay. So landing the plane. If you're a broker, we've given you a few heads up on some markets. If you are a licensee and you haven't had like face-to-face come to Jesus meeting with your broker, well, let me rephrase that. If your broker hasn't been in your face saying, hey, we've got a big problem here, then just initiate the discussion. I'm sure that your broker, since we all shop at the same grocery stores, literally has access to these programs, so that's fine. Have them be sure to reach out to these programs that we've mentioned. I think that I think that you need to be very engaged with the broker on the application process. Again, for reminding people that there are pitfalls within the application process. If you answer a question wrong because of capacity issues, you'll be kicked to the bottom of the list. Um, keep in mind the timing of how and when you can surrender and when you can actually cease all of your FFA operations. Um, Other than that, just don't make the same mistake that I did, waiting till I was 25 years old to realize that everything that my parents ever said was correct. This is your wake up call now. Like, just get out there and start making some tough decisions, because if not, then I do fear, like you guys had mentioned, Sarah and Kimberly, that there's going to be a lot of counties and a lot of FFAs and a lot of families thinking, what just happened? I feel like I just got steamrolled. And that should not be the case. There's plenty of information out there. Seek it out and figure out what's best for you guys in your specific situation.
Absolutely. Sarah, anything else?
No, I think that pretty much sums it up.
Okay. All right. Well, thank y'all for being willing to continue engaging in the conversation, and have no doubt there's more to come.
Good to see you guys. Thank you so much.
Thank you.
Thank you.